Today we're going to be talking about another discount stock that I see, and this one is Baidu. The ticker symbol is BIDU, right now trading at $208.61, trades on the NASDAQ, and as we can see here, the 52-week high was $354. Right now it's again trading at a steep discount to that, and if we see here from mid-February, it's down by close to 40%. Right, and I see this as a long-term buy, and there are a couple of reasons why this stock is dropping lower. But first, let's just talk about what this company is. So right now, we'll talk about Robin Li, which is the co-founder and boss of Baidu. He is said to have been lucky with regards to the rise of his platform, because thanks to government censorship, Google is inaccessible to mainland China, and Baidu is basically the Google of China. Okay, so that basically leaves Baidu the unrivaled leader in Chinese search. Okay, but the main problems with this company is that number one, rising US-China tensions promote delisting, taking money away from major investment firms in Baidu. So basically, when a company is delisted from a US exchange like the NASDAQ, it trades on the over-the-counter markets. And what that happens, that means that due to certain regulatory requirements, certain companies and major US banks like JP Morgan Chase have to liquidate their investments in Baidu because they can't invest in over-the-counter stocks. Okay, but if you own shares in Baidu and it does become delisted, you will still own shares of Baidu. It'll just be on a different exchange. But generally, that means when a delisting happens, that tends to take money out of the stock. Okay. Number two is, of course, rising interest rates, which discount future earnings on high-flying tech stocks. Okay, so if you have been following the markets closely, you know that the treasury yields are rising and also that interest rates are rising, which also tends to, like I said, discount future earnings on high-flying tech stocks, especially when they have a high PE ratio and they trade to significant sales to growth multiples. But I don't see Baidu and Alibaba, which is, I'm invested heavily in Alibaba, as one of those companies. Okay, and finally, the next thing is that slowing advertising revenue has been seen during the pandemic as advertisers had to cut marketing costs, and this slowed growth. And so although they are still the undisputed leaders in search engine side of things in China, so for example, they had 538 million monthly active users in 2020, their advertising on their platforms was down by 5% from last year, and which was $9.6 billion. Okay. So the thing is, also the supply of digital ad space has multiplied, increasing competition and depressing ad prices. So businesses can choose now from a wide array of platforms, such as e-commerce upstarts like Pinduoduo or even Alibaba, for example. Okay, and the solution of this is, of course, that Baidu is going down a different road, and Baidu is rapidly diversifying. Okay. And so what they're doing is they're investing in the cloud to compete with Alibaba and Tencent, and they bought up YY Live, which is a video sharing and live streaming app. Okay, so if we look at some of the results, so again, advertising revenue was down by 5% compared to last year, as it can be seen right here, highlighted by The Economist. Next thing you know is, of course, Baidu to ramp up investments in cloud computing, artificial intelligence, something that Tencent and Alibaba is already doing. And Alibaba actually just turned a profit on their cloud computing software side of things. But there's so much space in the cloud computing infrastructure that Baidu will definitely have and be one of the competitors in that space. The next thing is Baidu is going to acquire, like I said, YY Live for $3.6 billion. And this was posted on November 16th, so a while ago. And it's in an all-cash deal as a Chinese internet giant makes a further push to diversify beyond its core search business and play catch-up in video entertainment. So again, this is a pretty big thing for Baidu, okay? But the main attraction is its intelligence driving unit, which I didn't know until now, that it's really, really attractive, okay? And so this one has three prongs. So one, it wants a nationwide fleet of robotaxis powered by Apollo, which we're going to look at right here. You can just search up Baidu Intelligent Driving Unit, and here you'll see their robotaxi network, which is actually really exciting. So it houses their in-house self-driving tech, and it already has operating self-driving robotaxis in parts of Beijing. Now this is, as Kathy Wood and ARK Invest would like to point out, like more than $1 trillion opportunity. Okay, so they already have operating robotaxis. They don't charge customers, but they might charge customers soon. I did a little bit of digging into this. So the robotaxis, which are produced from China's first factory-installed L4 passenger vehicle production line that jointly been built by Baidu and FAW, have already entered the stage of testing operation on public urban roads. So that's really, really exciting. The second prong is that they're starting to make mass production of EVs, and they're partnering with Geely, a Chinese car maker. And finally, they're selling services to Chinese car makers, such as high-definition maps and automated parking tech, and they already sold their tech to about 10 other car manufacturing firms. So I really, really like this. And I mean, I feel like not many people know about this. It's just been sitting on the sidelines. Not many people know about this part of Baidu, but I feel like this is a massive opportunity that's just waiting to explode. And it's really cool that they actually have cars on the road driving people around with their autonomous and intelligent solutions network. Okay, so this is something that Tesla has been wanting to do for a while, and I feel like Tesla's on the cusp, but now they just need to overcome the hurdle requirements. But they're already doing this in parts of Beijing. Okay, so let's look at the valuation of Baidu. It's ridiculous. Okay, so they're earning like 107 billion in revenue just in 2020 alone. Okay, and their profits were 22.47 billion. You're looking at a company that has a market cap of $70 billion. Okay, and I mean, like, it's like, you know, you have just their 2020 earnings alone was like a third of their market cap. That's just ridiculously low, attractive valuations to me. Okay, and if we actually look at some numbers, so their trailing P is 20. Again, it's not very high for an overall stock, but it's very low for a tech stock. Look at the forward P of 17. Okay, 16.88. That's just ridiculous to me. Okay, and they're still projecting so for the current year close to 20% revenue growth. Next year, 2022, they're projecting 14% revenue growth. All right, so I like this double-digit growth, and yet they're trading at such an attractive valuation that I might have to buy some shares in Baidu. Okay, you compare that to anything like Amazon, you compare that to Tesla. It's just like I think this has such a nice valuation that I might need to put some money in this. Okay, and if you want to check out exactly when I will be buying Baidu, please be sure to join my Discord chat and connect with me, as well as the growing community of Discord users. We talk about generally things like deals in the markets, and in the private stock group chat, we talk about deals such as Baidu and when I will be buying these companies. Okay, so take care. Be sure to smash the thumbs up, and I love you all. Let me know what you think of Baidu. Subscribe if you haven't already, and have a fantastic rest of your day.